That one. Okay. Okay, let's start again. Everybody hear me okay?
Yes.
Good morning. Dennis Hearing with AmeriFirst Financial. Patricia, thank you for the invitation to present. Starting off today's presentation, going to be talking about the Relo Matrix or the Relo Funding Program, which is the program that enables us to be able to legally and RESPA compliantly send referral fees back on any transactions that we do together. That would be a purchase or a refinance. And it is up to 0.5% referral fee back on loans up to $500,000. So a maximum referral fee back of $2,500 per transaction. The big thing here is I would stress the fact that we can do it for refinances. Never before has a realtor been able to get a referral fee back from their loan officer for a refinance. Now you can. And RELO stands for Real Estate Loan Officer, not for relocation program. This is not a relocation program. RELO, of course, is Real Estate Loan Officer, and that is the way that we are able to send you referral fees legally. You basically will go through the 20-hour course, obtain your loan officer's license, hang a part-time loan officer license with AmeriFirst Financial, and then be able to get your referral fees legally. Just the same way you could not send me a referral fee for sending you a real estate deal because I don't have an active real estate license. This is exactly the same thing. So first to market is a big deal. You know, of course, Netflix came to the scene, offered Blockbuster an opportunity to participate. They said no, and we know the history from there. Blockbuster is gone. Netflix, Hulu, and every other online streaming service is now the way. Nobody goes to the store anymore and, you know, gets those 8-track videotapes or whatever. Same thing with Amazon. Amazon started out as a bookseller, and look where they are now. They sell everything under the sun and have put a lot of big box retailers out of business. Now, with regards to the real estate industry, what we're trying to do with our program is to avoid these large fintech companies from putting both of us out of business. Amazon, Zillow, they're all getting into both sides of the real estate. They are no longer simply looking to deliver data and market data. They are looking to take the buyers and sell them a house directly and provide them the financing, and, you know, just merely take money from us for advertising, making us think that we can, you know, hang on to those buyers. But so what we're trying to do at AmeriFirst is to put those guys in check, if you will, put them out of business. I don't think that's going to happen, but certainly put them in check and to keep both of us in the main forefront of our business. So a little bit about AmeriFirst. AmeriFirst, we're one of the largest mortgage companies in the United States. We lend in all 50 states. We employ about 400, I think we're closer to 500 full-time loan officers now. generating a little over $8 billion a year. This year, we're expected to hit somewhere around 10 or 12 billion. And our 2-year goal is to break in the top 20. And our 5-year goal is to be one of the largest mortgage companies in the United States. Right now, everybody, of course, knows that Rocket or Quicken is the largest. Majority of their business is, of course, in refinance. Many people don't know that, but about 50% of their business is in refinance. They like to churn their mortgages. So the reload funding program is modeled after something that's been around for quite some time, but often misunderstood, like Mary Kay, Avon, Amway, insurance companies. Your insurance agent gets paid every time that you renew. So that's referred to as residual income. And that's what we are all wanting to be able to access. Residual passive income, make money while you sleep. That's how to get rich and stay rich and be wealthy and enjoy life. To be able to collect money, mailbox money, as we used to call it. Of course, nobody goes to the mailbox anymore for checks, but so direct deposit, residual passive income. So loan officers can attract and enroll loan officers, and real estate agents can also attract and enroll other loan officers and real estate agents into the Reload Funding Reload Matrix program. Real estate agents, like I said before, have to obtain their loan officer license to qualify. It's a 20-hour course in most states. Here in Florida, it is a 20-hour course. And you're able to get that 50 basis points or 0.5%, however we want to refer to it, up to $2,500 per deal. And it is good for conventional, jumbo, and non-QM. It does not work for any government loans such as VA, FHA, or USDA. Real estate agents stay with their current brokerage. It's not like you're trying to, when you talk to someone, it's not like you're trying to recruit them, initially anyway, to Premier. Obviously, later on, once they see how great you are and how great this program is and how great Premier is, you may end up recruiting them, but it's not a recruiting call. It's simply you're introducing them to a way that they can add 2 additional streams of income to every deal that they do. Of course, unless it's a FHA, VA, or USDA. Now, when it comes to the loan officer, a loan officer must move their license to AmeriFirst Financial in order to participate. It's illegal for mortgage people to occupy 2 different brokerages, much like realtors. So here's how the program works. There's 7 levels for the passive income stream part of things. And as you introduce and refer additional realtors or loan officers into the program, you start to fill out your various levels. And it only takes one person in your line to open up level 1. And basically what that means is you would collect $100 per loan that you had nothing to do with. It would be the person that you introduced to the program, they're closing a loan with us, and when it closes, you make $100. That realtor would make their 0.5% referral fee for referring us over the loan, and so on down the line. As you introduce people and they introduce people, the person that you introduce, they introduce someone, they would be on level 2. Like Patricia's on my level 1, and a number of you are on my level 2. And it only takes 5 to open up that level 2. And on the right-hand side, as you see, those are personally enrolled. So I would need to enroll, or you would need to enroll only 20 agents in order to open up all 7 of your levels in order to collect. And just to kind of give you an idea of how that would break out. And again, what we tell people is, have a long-term vision for this. Nobody's going to do this overnight. For me, it's a 3-year to 5-year plan to build out my matrix completely. But let's just say it takes you 2 years to attract 10 agents into the program. And it takes them 2 years to attract 10 each into the program. This is what this would look like 2 years out if that was the case. And we assume very moderate levels that each agent is doing just one deal a month, or an average of 12 deals a year, which averages out to $120 deals a year times $100 per deal. And that would be on your first level. On your second level, those 100 agents do 12 deals, which ends up being 1,200 deals. You don't even probably know most of these people. You don't even know them because they were introduced to the program by someone you introduced to the program. And let's just say the same thing. They do 12 deals in the year that qualify. That's 1,200 deals times 140, which is the second level qualifying amount, $140 per deal, which is 168,000. So total, that puts you at $180,000 in passive residual income on deals you may or may not have even had anything to do with. Now, when we move into the actual matrix itself, this is where it gets interesting. And what we like to do is it's called duplication, right? You introduce 20 people and they tell 2 people. Now, what I've done is I've blocked out both the bottom and the right side there, because that is really more specific to the mortgage person. I'll open it up at the end, but I want you to stay focused on this left-hand side, which is the passive residual income stream that's available to both realtors and mortgage people. And then on the right-hand side, it would be what a mortgage person would want to be seeing, which is where they actually make money doing the loans. But let's just say you introduce 20 people, 20 agents into the program, and they're only doing 4 deals a year. Well, that's still 80 deals a year, and it's still at $100 a deal. So that's still $8,000 in passive residual income. Now, we like to say that those 20 introduce it to just 2 people each, which now has 40. So now you have 40 on your second line. They're also doing just 4 deals a year, which is a total of 160. And that qualifies at the $140 per deal. So now you're looking at 22,400. Well, that's a total of 30,000 already. And so on down the line. Those 40 introduce it to just 2. So now there's 80 in your third line, and they're just doing 4 deals a year for a total of 320 on that third line. Well, that only pays 40, which is not bad because it's 320 deals times 40. So that's $12,000 that you'd be getting in residual income from your third line. Add it up, you're at over $40,000 in residual income. Well, let's say the next year, those 80 introduce it to just 2 people apiece. Now you're up to 160. And this is where it really starts to get interesting, because now you're looking at well over 1,000 deals going through the matrix and starting to generate positive residual passive income. And you're starting to get close to that, what are you at? Over $60,000 in passive residual. Well, now the numbers really start to ratchet up, and each on down the line, just introducing 2, only doing 4 deals each on average per year. It's pretty low, but as you continue on down, let's say this took you 5 years to build out. Let's have a very long game perspective on this. Let's say it takes you 5 years to build this out on down the line. And of course, when it gets to the 7th level, that's when it gets really interesting, because now we're back up to $100 per deal. There's over 5,000 of those deals going through at this point. And, you're looking at close to $750,000 in passive residual income. Personally, this is what I see myself building out, shorter than 5 years. But if it takes 5 years, I'm okay with that. And the next slide is where, if there was a mortgage person that wanted to see this program, I would be showing them the entire right side of the matrix as well, because this is on down the line. We're assuming that we make money on each deal that we're doing, and we have the potential to generate over $25 million in active income. Well, there's no way that we could actually do all that. So we have the bottom table that shows how we can create a business within a business and hire enough staff to handle all that business, which would put us as a gross profit. of approximately $20 million a year. Any questions?
I do
think
have to say that Craig Carter and I started our test.
Yay!
Test is not, well, we started with MEC.
Yeah. Are you doing the practice tests?
Yes,
Okay,
and
good.
as you go along the test, at the end, it will ask you, as you go through the course, each part is about 2 minutes and
Yep.
3 minutes. So it makes it very easy. So if you have a few minutes a day, okay, you go ahead and do it, ask you a couple questions, which you can look up online and answer if you're unsure. But it's really not hard to get through the 20 hours. And then they also give you a textbook guideline, which you can look up and tells you all the areas that you'll need to know, which as a real estate agent, a lot of it we already know.
Yeah,
I just wanted to
it's
add
brilliant.
that. Only a 20-hour course that's required, and you can study on your own after that, take the state exam. It's a lot easier than you think.
Great advice. Yep, it's super easy, and that's why, it's just do it. It really is that simple. Just jump on, do it. And so, great question. Somebody else just asked a question. I'm going to repeat it. Once you join, how long does it take? How much time do you have before you have to take your test and finish? Generally, it's 90 days, but we know Patricia, it's been a little bit longer than 90 days since she's been in. She hasn't been kicked out of the program. We're not kicking people out of the program. And Patricia joined when we were just getting started with this, and it was a little bit different. In order to join, you had to go to a Google Doc and put your information in. Now it's super streamlined, it's super simple. And Patricia has a direct website, as you can see right there, premierrelomatrix.com. If you go to that in a browser, on your phone, whatever, it opens up real nice on the phone, and it'll take you right to the spot where you can sign up for this program right now. It literally will take 30 seconds or less for you to fill it out. Her name auto-populates as your sponsor. Yep, there you go. Yep, Yelmar's got it open. So just walk through, you click yes, and you fill out the basic information. And what that does is it puts you into the system, and our corporate onboarding team will send you an email generally within 24 hours introducing you to what the next steps are. You'll get 3 different PDFs will come in an email, in the welcome email, along with your own code to start talking to people about this and introducing them and signing them up. I can tell you that personally, I had signed up about 40 or so people through 4 levels before I even started working for the company. So, I took it for a test drive. When I joined, there was approximately, I think, 500 people across the nation that were involved in this program. And right now the estimates are closer to 4,000, which, indicates that this program is growing, but it also indicates that this program has such a long way to go. If you think about that, there's well over 1 million licensed realtors across the United States alone, and probably, 500,000 licensed mortgage brokers across the United States as well. There's a lot of opportunity to introduce this program to a lot of people.
Now, can we also recruit people who aren't licensed?
Yes. So great question. You can also recruit pretty much anyone who has an entrepreneurial mindset, is how I like to put it. So it could be a title person. It could be a local insurance person. It could be just about anyone. And they can participate in the program. They can get paid referrals on the Matrix. Again, the only thing they have to do is take that 20-hour course, pass their loan officer license test, and have hang a part-time LO license with AmeriFirst Financial. They do not have to be active in real estate. They do not have to be an active mortgage person. Obviously, in order for their matrix to work, they have to know realtors or mortgage people and introduce them to the program in order to have something that's happening in their matrix. But certainly it could be just about anyone. It could be virtual assistants. It could be unlicensed real estate assistants that can definitely participate in the program. And of course, then if they get licensed and go through the process, they can collect referral fees for introducing loans, whether it be a refinance or a purchase. Yeah, that's right. Yep. Super simple. Yep. That's Patricia Delanois, your sponsor. Yes. All right. Any more questions on that part? All right. I'm going to run through some of our newest proprietary programs that we have out. They're all three designed specifically for the market that we're in right now, which is a seller's market. And we're trying to develop ways that your buyers who are using financing can compete better with the cash buyers that are out there. Not to diss anybody who's working with cash buyers, good for you. But those of us that are not working with cash buyers, we have a couple of programs that we've put together to help compete. The first one is called Protect Your Transaction, or PYT. What this is a differentiator between the pre-qualification letter and the pre-approval letter and the DU pre-approval letter. We all know that there's different levels of pre-approval. A pre-qualification is essentially somebody having a conversation over the phone and not even necessarily pulling credit, just saying, yeah, everything sounds good that you're telling me. I'll send you over a pre-qual letter. It's garbage. Never, ever accept that if you're a listing agent. Obviously, no one here would, because they know better. Pre-approval would be, I've pulled your credit and run the income and everything looks great. I'm going to send you a pre-approval letter. Fantastic. Well, that's better than the pre-qual, but it's not as good as a DU pre-approval. DU stands for Desktop Underwriter. That is a risk analysis program that all good mortgage people will use. And I personally will not send out a pre-approval letter until I've taken the borrower all the way through that process. That DU will actually cross-check every piece of information that I have entered into the system and render a decision of approve or not approve. So that's why a lot of people will ask now, oh, do you have the DU? And the DU alone has a lot of mystery behind it. People will ask for it, but there may be some lenders that say, well, I can't give that to you because I can't. Disclosures won't let me. Well, the reality is that I can release it to the borrower, and the borrower can release it to anyone who they wish. Or what I typically do is I will ask the borrower, is it okay if I release it to you and your realtor at the same time? Because more than likely, if you're putting in an offer and the listing agent is a good listing agent, they're going to ask for a copy. Take a look at it. There's nothing in there that discloses your personal information. Your social security number is not on there. Your birthday is not on there, but it does show your full credit history of active accounts and what you have in the bank based on what we've put in. It doesn't show your bank account numbers or anything like that. So if you're working with another mortgage broker and they say they're not allowed to give that to you, just check them on it. This is a letter from our CEO, Eric Bowlby. What this PYT program does is it actually takes the next step beyond a DU approval. We will then take our borrowers, your buyers, and send them into underwriting as though we have a contract in place. So they will be reviewed by an actual live human underwriter, and we will get what we always get when it comes out of underwriting, initial underwriting, and that is a conditional commitment letter to lend on a loan. In this case, there is no property attached to it. but we're already at that point where now we can say, hey, we have an approval letter from an actual underwriter. And that is definitely one step greater than having just a DU approval. And it comes along with an assurance policy, not insurance, but assurance. Basically, the company will put forward a $15,000 assurance policy saying that if in fact our underwriting team missed something, we will pay a $15,000 restitution for having made a mistake. Now, this assumes that nothing has changed. Once you go under contract with an actual property, the property appraises, everything on that side is good, assuming that no one changed jobs, quit their job, anything that would alter the decision of the underwriter. And this is $15,000 for everyone, and then they throw in an extra $5,000 for teachers, nurses, veterans, first responders, police, nurses, everything like that. They'll give a $20,000 assurance policy. And this is actually, it'll come in the form of a certificate. I just covered all this. So it comes in the form of a certificate that has a certification number on it that the seller and the listing agent can actually go online and verify that the process is legitimate, that they actually have gone through this entire underwriting and have a legitimate commitment to lend. And typically what we'll do is we will, run it at a maximum qualifying number for the program, so that it gives you the flexibility to shop, down below their maximum qualifying anyway. And typically maximum qualifying for most people is more than they want to spend on a monthly basis anyway. So usually in good shape. All right. So this program is fairly new, but it started out in the Midwest, and this is just a quote from a realtor who's gone through it. In the competitive market, little advantage you can get to help your buyer is critical. PYT is an ironclad protection that ensures there won't be issues with the loan. It also demonstrates as a lender, AmeriFirst puts their money where their mouth is. This is huge and something that a seller has a hard time saying no to while they're contemplating multiple offers. All right, thank you. Any questions on the PYT program? Okay, next two programs that we have up is our cash buyer programs. One is for buyers and one is for sellers. The first one is a kind of like a traditional iBuyer purchase program. What we do is we will, after someone has gone through the PYT program, we will then be able to step in as a cash buyer for them, so that you now will be working with a cash buyer. Even though they are financing, you're going to be working with us as AmeriFirst as the cash buyer. That would be who would be on the contract. And it would be an assignable contract. And basically the concept here is that we come in, we are saying to the seller, we're a cash buyer, we're going to buy this cash. Of course, we still have to retain the contingencies of finance, the appraisal contingencies. We're not waiving any appraisal contingencies unless the buyer themselves has the wherewithal to make up the difference. That's not something that we're going to do. We're still going to only lend on the appraised value. But basically the concept here is that we are the cash buyers, and then by the time the closing date comes, we are simply having to finish the financing for the buyer, because the buyer's already gone through the PYT program, right? So they've already been underwritten. They've already had their conditions worked on. So the only thing we're really waiting for is a property address, title, and appraisal. So we can pretty much wrap that up in a matter of, a couple of weeks. And I say a couple of weeks because that's how long it's taking for appraisals these days. I recommend all of my buyers use the rush opportunity. They pay an extra $150 for a rush appraisal, but it definitely shaves off about a week to a week and a half of the time it takes to turn around a regular appraisal. And like I just said, the rules are they have to go through the PYT program first. The borrower must have a minimum of 6% of earnest money. That's the difference on this program. And this program for the cash buyer does not work for FHA, VA, or USDA. And the reason for that is because they have flip rules embedded in the guidelines. And technically this would be a flip because we're basically assigning the contract. Ideally, the entire process takes place before AmeriFirst actually has to close on the actual transaction. However, if in fact for some reason the borrower is not ready and can't close yet, perhaps they have a house that they're selling and it hasn't closed yet and they need the proceeds from that, that would be a perfect situation of why we wouldn't close in the borrower's name and have to close in AmeriFirst. And then basically there would be two closings. So AmeriFirst would close and then the borrower would close on the purchase after the fact. And the commissions have to stay in place until obviously the final customer closes on their loan, because you really haven't closed on the transaction yet to close on that final buyer. And the fees for the services, AmeriFirst charges a 1.5% fee. And if in fact it does not close in the borrower's name and AmeriFirst has to do it, they charge a carrying cost of 8% annualized per diem, which sounds a lot bigger than it is, but it's really not that much money. Then we also have a situation where we will come in as an iBuyer for your sellers. If your sellers need to move faster and aren't quite ready to sell, but they have to get the money out of their house in order to buy the new house that you're in contract with them for, and maybe the timing is off and the other seller is not reasonable and wants to close quickly, we will step in and act as a cash buyer for your seller, purchase their home at 90% value, and then give you time to sell the property at full market, and then give your seller the difference after it's sold. So it makes them whole. This is not a discount. We're going to buy the house at a discount from your seller. We're going to give them 90% up front and then give them the remaining, whatever it is you sell it for after it's sold. And the carrying costs are pretty much the same. The fees are the same. They charge a 1.5% fee, and the carrying costs are also that 8% per diem. All right, that's it. My presentation is done. Any questions?
Hi, Dennis. It's Karen. I have a question for you.
Hey, Karen, how are you?
I'm wonderful. I hope you're well. This was a great meeting. I was so excited when we first met you on Zoom and you first told us about this. And I have a little boy who ended up having to do virtual school for a few months of school, and it kind of rocked. I really put things behind. Yeah.
Yeah, got you behind.
Yeah. But finally, everything's kind of back to normal for most of us. And
great.
I am signed up through the member link to be a new member with Relo.
Okay.
But I wanted to know specific steps for the test, because I did have a little trouble in the beginning when I first learned about this, how to schedule the test.
Okay. All right. So what I can do is I can send that PDF back out to you.
Oh, okay. If you've already sent it, I'll look for it.
Right. So you would have gotten, back then it was Sharika Sharicka.
Oh, yes, I remember.
Right. So she would have sent you the email at that time, and it would have had the 3 PDFs to walk you through the whole process of going on to the NMLS, which is the first step. You have to go to the NMLS and register yourself there and orient yourself with AmeriFirst Financial. And then the other PDF will walk you through signing up for the classes with mortgage educators. And there's a discount code on there for mortgage educators. You don't have to use them, but you can use any one you want. But I say that their program is pretty darn good. And then, of course, you want to take advantage of the practice tests.
Okay, wonderful. Thank you for that.
Oh, sure. Yep. Just let me know if you can't find it.
I really like your 2 new programs, your iBuyer cash program from the seller. I think that's a great opportunity for somebody who's stuck in a bind.
Yeah. And it's, unlike the other iBuyer programs, I'm familiar with most of the other iBuyer programs, and they are all about the iBuyer being able to purchase a property at a discount so they can flip it. So ours is not that. It's not an equity share. It's simply a service that we're looking to provide to our customers to help them, navigate through these times. And it works for.
Send us a bullet point on all 3 programs.
I absolutely can.
Okay.
I can definitely do that. All right. Well, if no, ask him at the end for a copy of this PowerPoint. Okay. Yes, I can send you a copy of the PowerPoint. Excellent. All right. Well, if there's no other questions, I want to thank everyone for taking the time out of their day to meet with me today. Hopefully soon we'll be able to meet face to face here in the office. I found it. I'm here live in your office. Everybody have a great day. Thanks very much.
For helping us make extra money that could help us all retire in the future when we're done selling real estate, right?
Amen. Exactly. Get off of the hamster wheel, as we like to say.
Thank you.
Bye-bye.
Thank you.